Welcome to the Bull, the Bear, and the Ugly podcast, your no-nonsense guide to the markets. Whether you're watching us live at sktrading.live or listening on your favorite podcast platform, we've got you covered. Subscribe, join the community, and get ready to dive into real talk and real market insights. Let's get started.
Hi everyone, I'm Stephen Kalayjian and welcome to the Bull, the Bear, and the Ugly. Wow, it was absolutely insane today. At one point this morning at 10:30, the S&P futures were trading 53.05 and the NASDAQ futures were trading above 18,000. And, just from a trader's sense and seeing the technicals, I kept on seeing that we were making new highs, and I'll show this to you, that we were making new highs in the 30-minute MACDs on the continuous contract on the NASDAQ and S&P futures. We're not making new highs. And I'll tell you, I just sniffed it right out. A lot of people were saying, Steve, why are we shorting up here? Why are we shorting up here? I said, I think they're going to drop. I'm looking at the sell divergences here, and we were some 30, 40 points away from the 10-bar moving average just on the 5-minute time frame. And all of a sudden we started dropping, never looked back. And then around 12:30, we got the sell reversals on the underlying ETF, the spiders. And I knew once that happened, the highs were in for the day. That was it. Finished, right? Then, boom, at 1 o'clock, the 30-minute time frames reversed to sell. So now, that's it. It's over. We're looking for shorts on every bounce on the 5 and 15-minute time frame. At 1:30, we got a great short off the 15-minute time frames, which I'll show you. We never looked back. Then at 2 o'clock, the 60-minute time frames reversed to sell. Around 1:30, 2 o'clock, the 60-minute time frames reversed to sell. Now you're in a negative trend. ADXs are rising on the 15s. This was a complete monster sell reversal. Whoever paid 53.05s and a halves on the S&Ps, they jumped, okay? Avago was trading 166, 168. Look at where it closed, 154, 156. MSTR, we were calling shorts above the 282 level, 237. People have not seen this, okay? And most important, I have over 41 years of experience. So I'm really blessed to say that I've seen a lot. So this doesn't really faze me, all right? And I was shorting up there, the Qs. I was shorting up there. And Microsoft, we had shorts. Apple, I don't even think I caught one long in Apple today. I just saw a deterioration across the board. Let me get right to this, okay? Because I really want to show this to you, all right? The bottom line is the S&P futures traded from 53.05 and a half down to 49.40, and right around 3:45, I had nice longs in there. We blinked. They were up 60 points on the S&P. Insanity. Ultimately pushing from 49.40 up to the 20 level. They ran 80 points, then dropped about 20, ran another 20. I'm telling you, it's absolutely insane. The volatility is absolutely insane. If these index futures are moving, like if you literally have to be like a fighter pilot. You have to keep your hand on the mouse and you have to keep moving. This game is so fast now. Now, granted, it's because of the news with the tariffs and everything. Back in January, I remember there was a 2-3 week period where the S&Ps sometimes between 1 and 3 o'clock were moving between a 5 and 7 point range. I would say, somebody please ring the bell. It was just, that's how quiet it was. But we got big sell reversals here today on the 15 and the 30-minute time frames. Great shorts in Coinbase at 2 o'clock. Above the 56 and a half level, caught that short. Really great patterns here. So let me just show you what I'm talking about here. So today, this is the 30-minute time frame on the S&P futures. When you see here, this high could not make a new high right there. Okay. All right. Now I even dipped it. So I'm saying we're making new highs here, and the MACDs are non-confirming. on the 30-minute time frame on the S&P, and I'll bring up the NASDAQ futures. So this was, to me, a monster sell divergence here. So people were saying, Steve, we're shorting. I said, yeah, the 30-minute MACDs are not confirming the highs right here. You can see it. Okay. Now, even if I did my global cross here, if that works, let me see if this works here. If I can do it here, you can see even on a more perfect line, you can see that the MACDs did not confirm on this right here. Did not make a new high right here. So you're making new highs, and the MACDs were non-confirming. And I'm jumping up and down like a baboon, and I'm saying they're going to drop. I don't see this. We're extremely overbought, 95, 98 overbought readings. The MACDs are not confirming. I don't see it. And then right here, you can see shifting to the spiders, the 30-minute time frame. Right here is a 15. And then at 1 o'clock right here, the 30-minute time frames reverse to sell. Now, we're going to look to short the first bounce on the 5-minute. And here's the bounce on the 15 right here at 2 o'clock. When we got this push up right into the 10-bar moving average, indicator 3 was over the 80 range. If you can see, based upon this bar, the high bar is 509.10 and the close is 506.72. So basically what happens is this oscillator, indicator 3, moves dynamically and it traded upward. And so when you got that high of 09.10 on the spiders, the oscillator, indicator 3, was up near the 85, 88 range. I saw it dynamically on the 15. But because it closed at 506.72, you can see that it dropped more than $2.50. That $2.40 that the oscillator plots end of bar. So basically what happened was that at the end of you can see the drop here, okay? And then the 60-minute time frame right here reversed to sell. Then here at 1:30, the 60-minute time frame reversed to sell. All right. Now, you did have a couple buy divergences here on the lows when you're making the 60s got into a deep oversold. That's why I was calling the low at the end of the day, just for a little bit of a bounce here, right? You can see the MACDs on this 30-minute right here did not confirm the low. So between the MACDs not confirming the lows here and the MACD positive on the 60 and the MACDs not making a new low here on the 30-minute, there was a little bit of a buy divergence right there. So that's why I said I'd be looking to buy them on the deep oversold condition. At one point, the indicator 3 right here was at a 1, okay, on the 30-minute. So this is why the market had some cushion here. So you had the positive MACD here on the 60. You were in a 4 oversold reading on the 60, a 1 at one point. The MACDs did not confirm the low on the 30-minute, and the MACDs, you can see here, did not confirm the low on the 60-minute time frame. If you understand how to use my technology and understand the technicals and understand these patterns repeat themselves, and everything I do is based upon divergence patterns. So being able to see this, all I need to do is just look at my big time frames here. I see the MACDs positive on the 60. I see the MACDs are not confirming the lows on both the 30 and the 60. I see that we're extremely oversold. And so when we got that big flush down, all right, we had to call the short up at 36 at 50.36 at probably around the 220, the 320 time period, 50.36, and then they dropped all the way down to 49.40. And I turned like this and I said, wow, this is going to hold here. So even if we get a big push down tomorrow, I think the market's going to have some underlying cushion here, because I don't see these MACD unless, with this tariff news coming at midnight tonight and taxing China at 104%. And if there's some, who knows what's going to happen with words. But, I'm so grateful that so many people did phenomenally well with me today. And that's all that matters to me, to identify the patterns, to identify these moves. They're vicious, they're fast. I'm telling you, this is someone that you want to gain experience. Well, guess what? This is how you gain experience. I'll tell you that right now. This is monster patterns, monster moves, and you really, really quick markets. I mean, even myself, I'm even shocked at how they move. We're long S&Ps here at the 340 time period. I couldn't even believe what I saw. Boom, 90. They rallied 50, 60 like that. I'm like, this is insane moves. But you know what? It's great. This is what you want, as every trader wants volatility. But more importantly, you want to be able to trade the right patterns. You don't have to trade everything, be very, pick your spots, hit your goals. And most important, please, always use stop orders, and especially in these type of markets, okay? Now, look, Palantir, here's another great pattern, PLTR. When PLTR reversed to sell right here on the 15, well, this is the 30. Let me switch it over here. Here's the 30, and here's the 15 right here, okay? Palantir reversed to sell at 12:45, and then at 1 o'clock, reversed to sell here at 1 o'clock. Look at this beautiful short pattern right here. The first bounce on the 15-minute time frame into the negative MACD, the first bounce on the 15-minute time frame after the 15-minute time frame was negative, and the 30 correlated with the 15. Here's the bounce, here's the negative MACD, here's the short, and kabooshed right there. Look at that. Unbelievable short, almost $5 on the drop. Now, Palantir was trading in the right after above 86 at 10:30. At 10:30 is when the market peaked out today, at 10:30. And look at this drop, kabooshed. Look at that, $11. But from this short right here, okay, 80.65. Look at the drop. Look at this drop. Look at this, $10. 1, 2, 3, 4, 5, 6, 7 bars. Okay, 7 bars. All my trades last anywhere from 1 to 8 bars. Okay, so there was 7 on that pattern. So this pattern is the first bounce on the 15-minute time frame after the 30-minute time frame correlated. Meta, same thing. Look at Meta. Everything repeated. Everything was a short at 2:15. Meta, first bounce on the 15 after the 30 correlated. NVIDIA, kabooshed, finished. Look at NVIDIA. Look at the time, 2:15. I'm showing you this because I'm showing you how these patterns repeat themselves. I spent nearly 10 years of my life building this, okay? And this is all it takes, is just for you to be able to understand when the conditions line up, what's the next sequence of strategies to take hold. Every one of my 5 conditions, a trend, a buy reversal, a sell reversal, a correlation, and a disconnect, each of them has 2 strategies, a buy and a sell divergence. All my strategies, obviously, are predicated on divergence patterns, right? So when you have divergence patterns, all right, it's all predicated on this now to set the strategies. And that's all it is. When you see today that the SDS is reversed to buy right here on the 15-minute time frame right here, and then the 30, this pullback on the 15 at 2:15, that was the short. Now, I don't trade the SDSs, 25.72, boom, look what it did, almost ran $2. Look at the SQQQs, which was, this gave a confirmation. The SQQQs reversed the buy on the 15, and then at 1 o'clock, you can see the SQQQs reversed the buy on the 30. Here's the pullback at 2:15. The Qs got absolutely obliterated. If you want to see what obliterated means, look at the Qs right here at 2:15. They were trading 226.85, and look where they closed. They traded all the way down to 09 and then rallied 7 at the end of the day. These moves are vicious. These moves are pretty intense. Okay. These moves are something that when you have the right technology and the right patterns, you can see and identify these moves. This is why I do what I do. Today I was here all day long. I didn't leave for once. Okay. And I didn't eat. I stayed here. I knew the markets in this time period. People need me here. And that's what I do all day long here. Also, let me show you this Coinbase. I want to show you Coinbase here. So Coinbase reverses to sell, okay, on the 15, okay, right here. And then the 30, again, same thing, same pattern, 130 this time. Caught this great short right here. It was right here, this short right here. It was actually here, 56.24, or it was this one here. Yeah, it was 57 and a half. Caught that short, okay, into the negative MACDs on the 30 and the 15. Coinbase, look at it drop, almost $10, and then rallied 4 at the end of the day on this big buy program. It really is unbelievable, the moves here. MSTR, 15-minute time frame reverse to sell. It correlated with the 30 and the 60-minute time frame. Here's the 30. Trust me, the 60. Look at the ADX rising on both the 15 and the 30. And the 60 is also rising. You can see here, I'll bring up the 60-minute time frame. Never told you once to be long. Look at the ADX rising. The 15 reverse to sell. Look at the monster ADX rising. You could just take all the shorts off the 5-minute time frame. Here's the first bounce on the 5 right here. This is the first bounce on the 5, and here's the second bounce on the 5-minute right here. Okay, now I traded higher. The oscillator was much higher. 256.45. Look at MSTR. Unbelievable. Unbelievable shorts. Unbelievable patterns. Unbelievable all day. So this is exactly the type of environment that we're in. Okay. Again, this is all due to the fear of a recession, a fear of the fact that we're going to have a trade war here with China, and that this is not going to end quickly. When the S&Ps were actually up 85 or 90 at one point today, I actually called my friend. I said, I bet you're down on the day today. He says, you're kidding me. I said, I think down on the day. So we were actually down at one point when the S&Ps were trading 49.40. We were down 136 points. Actually, more than 160, almost 160 points on the S&P. So we're not out of the woods here. The big number that I'm going to show you is if this monthly, I mean, we still have, we're April 8th, we have April 30th. Who knows what's going to happen? But if this monthly reverses to sell, it will be the first time since June 30th of 2023. You know, I want to show you something. I got this last night off the internet, and I wanted to say this here. So I think I talked to my community about that today. Is that performance since 1980? There've been only, not including this year, since 1980. So 44 years ago, 44, not including this year. There have been exactly 10 times the S&Ps were down for the year. 10 times. In 81, in 90, in 94, in 2000, in 2001, in 2002, okay? In 2008, okay? 2015, 2018, and 2022. Right now, year to date, we're down about 15% off the highs. But you can see here, we had 3 years from 2000, 2001, and 2002. Of the 10 years within the 44 that we were down for the year, only 5 were in double digits, okay? Double digits, 10 or higher, okay? So the worst period of the 44 years was 2000, 2001, 2003. That has never happened since then. We have never had 3 losing years in a row. Okay, that's one. In 91, in 81, 9.75. In 90, 6.56. In 94, 1.54. In 2000, over 10. In 2001, over 13. In 2002, 23. In 2008, which was a subprime market, we were 38.4. In 15, less than a half, or less than three quarters of a percent. In 18, low under 7. In 19, 22 point, almost under 20. And right now we're under. So in 44 years, we had 5 double digits and 3 years back to back. So to me, this will get resolved. Okay, this will get resolved. And do we push down to 4,800 again, or maybe 4,650? Either way, I'm a buyer. All right. I think that this will get resolved. I think even if you got to push down, they're going to do something here to cut rates right away. They have things in their back pocket. They're not going to let the markets just free fall. I just don't think it. The game is too big. You have to learn, as I told my friend many, many years ago, I said, you have to think like them. And he said, what's one of the greatest lines he's ever heard. Okay. Big sell reversals here on all the 30 and 60-minute time frames. Tesla, Nvidia, Vago, Spiders, Qs, Diamonds, Russell, Palantir, Microsoft reversed, Apple reversed. Okay. Monster, Meta reversed here. So market's got some problems here. So, but again, let's just see what happens. And when I come back, I'll tell you what I expect for tomorrow. Tomorrow, coming into the day, there's no 8:30 number. The big number is Thursday, the CPI, and Friday is the PPI. So looking at stocks like Nvidia, the 60-minute time frames, the MACDs are positive, even though we're in negative trends. Avago, MACDs are positive. SMCI, MACDs are positive on the 16-minute time frame. Spiders and Qs, MACDs are positive. All right. So because these MACDs are positive on the underlying ETFs here, all right, it's going to, for me, I think if we do get any push down, combined with any deep oversold conditions like we saw, I think it's going to be short-lived. I'm not saying we're going straight up. I'm just saying I'd be looking for long trades for tomorrow. If you go to right now, if we go to the daily time frame on the S&P futures, we're back down to that territory right here. Let me make this a little bit bigger so you can see. We're over 500 points from the 10-bar moving average. One of the other reasons why I was calling for shorts is look at this negative MACD. Look at this negative MACD on the daily, and look at the negative MACD on the weekly. When you're pushing up in price, even though you're not overbought, ADXs are rising on both the 30 and the 50 on the daily. These negative MACDs, it's like running into a brick wall. ADXs are rising on both the daily and the weekly. So the market really had nowhere to go except down, especially with these negative MACDs. Now, the 60-minute time frames, okay, the 60-minute time frames are going to act as a cushion for tomorrow, all right? But we'll see what happens. Noon tomorrow is when these tariffs, or midnight tonight is when these tariffs are supposed to come in. So who knows what China's going to say while we're sleeping. It could be a crapshoot, okay? But we'll see. And what we do here is we trade what we see, and we trade the patterns, and we trade the divergences, buy and or sell. All right. So for tomorrow, that's what I'm expecting. Again, let's see how extreme it could be. If it is maybe something happens overnight, who knows? This could all get resolved. Or if it gets ugly tomorrow, then we'll be prepared one way or the other. All right. All right. When I get back, I really have to talk from my heart about certain things I've heard. There's like several that I really need to really share with each and every one of you. So there are a lot of new people who have joined my community, and this is the major leagues here, okay? And this is when you're trading and you have markets that have no soul, and that they are really just focused on, the price and the movements and the insanity of the volatility. Those of you who are new, you really need to learn how to use your platforms, okay? meaning you have to know how to execute orders. If you're short and your stock's dropping, you have to learn how to lower your stop. So if you're in a short and you have a stop way higher up and the stock is dropping, you have to look to start scaling into covering your short position and then lowering your stop. Today, someone had an error in executing the order where they end up being net long the stock as the stock was dropping. If you're not familiar with your platform, get used to it. Paper trade, get acclimated. Don't be your own worst enemy. Okay, learn. Like if I went to my friend is a race car driver per se, and he says, Steve, come to Daytona, and he goes, hey, you know what? I don't feel well. Go jump in the car for the race. I'll crash around turn one. I don't know what I'm doing, right? I don't want people crashing here. I want people to be successful here. And this kind of put me over the top today because it just really affected me that you have to learn your execution platform, whether you're trading on a matrix, a ladder system, whether you're trading and typing orders in and understanding the fields and the buy to cover and, close all or whatever. But it's really important because it's unforgiving. And like I said, if I got in a car and I floored it, I was doing 100 miles an hour right into a wall, that car is not going to brake on my behalf. So please, I'm begging each and every one of you, before you take the giant leap to start trading real capital, please learn your execution platform. Learn it. Practice. I don't care if you trade at night during the Tokyo session and practice on the E-minis. I don't care if you practice during the day trading stocks. Practice. The second thing I heard this morning when I was awake, that there was a man who's 80 years old. And he's like, oh, my 401k, oh, my pension money's getting wiped out. And I'm saying to myself, you're 80 years old. Why do you have money in the market? Right? I know sometimes different plans, but sometimes you may or may not be able to take the money out. But nothing goes up forever. I mean, there are aberrations in the market. I've lived it 41 plus years. I've seen the long-term capital. I seen 9/11. I seen the subprime market, COVID. Okay, I seen it. I've lived it. The crash of '87, my first one. Right, I was on the floor of the New York Stock Exchange. So my point being is that you can't just be complacent and always expect the market to go up. At 61.66, I'm saying to myself, look at this. You're making new highs, and the MACDs are not confirming on the weekly. Okay, now I didn't expect this. Okay, I did not expect this. I expected a drop, but not this. Okay, but my point is, this is a market. Yes, we've had great runs, like I showed you. 10 times the market's been down in 44 years since 1980. Right? So now people got spoiled. So yeah, this will come back. But from what level? Is it 4,200, 4,400, 4,600? Who knows? But eventually, in the next 12 to 18 months, 24 months, who knows? We should get back to above the 6,000 level. Okay? I'm confident of that. I can't say for certain, but I feel confident that will happen. Okay? So please, again, it just wanted to share this with you. And there's times to be in the market. There's times not to be in the market. There's times to be in cash. And, unfortunately, a lot of people, I had mentioned to some people when they asked me, I said, 57, 5,800, 5,900. I'm not going to pick a top, but I'd be in cash. I just think there's going to be something can happen. And ultimately, I do think 6,500 and then 7,000 in the next 8 months to maybe 15 months, 17 months, 18 months from now. But with that being said, I just want people who are trading the markets to know their systems, to understand them, and not be the guinea pig with live capital. All right. With that being said, thank you for joining me here on The Bull, the Bear, and the Ugly. Tomorrow is another day. Please follow me on social media, Instagram, Twitter, and X and TikTok. Also, please subscribe and please leave a comment. I try to answer as many comments as I can. Also, come to my website, sktrading.live. Really excited to talk to so many new people from all around the world, especially wanting to learn to trade. And I'm here to teach you each and every day. And I'm just so blessed and honored to be here. And most important, hope you have a wonderful evening. God bless you, and God bless the United States of America. Be well, everybody.
Thanks for tuning in to the Bull, the Bear, and the Ugly podcast, your no-nonsense guide to the markets. If you enjoyed today's episode, be sure to subscribe at sktrading.live or on your favorite podcast platform. We'd love for you to rate, review, and join our community for more real talk and market insights. Until next time, keep trading and stay sharp.